I made a really fun video today. This is kind of cool. I went back because I know a lot of you are newer subscribers or newer viewers to my channel. I went back a couple of years, as much as 3 years back, and I pulled out a couple of clips that I show you exactly what I said. And you can see what I said and then what happened. And then invariably you can say, wow, maybe I should have listened to Peter, which is one of my number one comments I get when things like gold goes through the roof. Gold mining stocks do exactly what I told you they're going to do. Then I get a lot of comments of, oh, I should have listened to you. You don't have to be that person. You can be the one who listens to me now. As long as you do your own due diligence, this is not personalized trading advice. Make your own decisions. Live with the results of those. I'm just trying to help you. If you guys want to get more from me, consider becoming a Peter Leeds insider. You get direct contact with me, a special newsletter to go with our world famous newsletter. And you keep us ad-free, sponsorship-free, independent. Consider joining the Peter Leeds Insiders for the price of a cup of coffee. I always tell you that it's a good investment approach to just always invest in whatever is the most unloved at the time. What could be more unloved right now than precious metals? In my opinion, just about every gold mining stock is at bargain levels right now. This is leading up to a situation where the market for gold is completely undersupplied. Gold right now is at about $17.25. Silver is at about just under $20. China's been buying gold by the billions of dollars per month, by the ton, and it got even more extreme lately, really significant increase in how much gold China is just absorbing and buying up. That's why gold is finally going to start to move. The demand trends are very positive. People are getting gold back into their awareness for the first time in feels like forever.
Please subscribe to the Peter Leeds YouTube channel so you will thrive throughout the economic breakdown.
I believe that gold's going to have its day. I imagine it's a matter of months, if not quarters, and if it's not quarters, then it's years. Gold is looking pretty lively today. Last I checked, it was up $54 per ounce. And of course, silver, rhodium, platinum, palladium, they're all going up together. And expect more and more of this going forward. This is showing you how fast moves can happen in precious metals, or anything in fact, when it's so far out of line with where it should be. This is just the beginning. So if you think you're missing the boat, there's still plenty of time to get on board this train. I think 2023 is going to be tremendously strong for precious metals prices. And I hope that some of you took my, not advice, but opinion that you should get into some things like Kinross Gold, Newmont Mining, a lot of these big gold miners, because they're going to benefit from the rising prices we're going to see in gold. You're seeing the price of gold swing wildly, big moves up or down day to day now. And that's generally when you see a market top or bottom, you start to see the volatility of the underlying thing increasing. It's becoming more volatile. The moves are more significant in either direction, but they're just more significant. And I think in this case, it is indicating a market bottom for gold prices. And the big pain you feel won't be in 2023, but you'll see all of the seeds that have been planted for it. All of the pieces are in place for this to line up to be eventually a big, massive, significant recession or depression. And here's what I'm talking about. You can track how much gold is coming out of Switzerland and see where is it going. And that's how you track how much gold China is bringing in. With the recession that's coming in, and it's going to be a big one, there's going to be less demand on everything, even commodities. But gold is a play on the collapse of the American dollar, which is underway right now, and it's a question of how fast it happens. So interest rates have had 6 increases this year so far, with another one to come in 2022. And during this time, people think that's bad for gold. And during this time, gold has really started to move lately. And I'm saying that it's got a lot more to run higher, and it's just getting started right now. The American economy is in such worse shape than anyone overseas is recognizing. And when everybody figures this out, so too will gold. And I'll show you some charts. The sources of these charts is tradingeconomics.com. Here are the gold reserves that are in Russia right now. And you can see for over a decade they've been buying aggressively. You don't have to worry about gold. Gold can worry about itself. It'll take care of itself. The lower the price of gold, the more demand and the more mine shutdowns, the more constraints on supply, the more demands on demand. And in the last 10 years, all the BRICS nations are dramatically increasing their gold holdings. People forget what precious metals are for, what they're about, and they're going to be reminded in a big, big way. And I've told you before, with my whole philosophy on this, 2 words, just wait. If you're worried about gold prices right now, just wait. After a long time of being unloved, gold is finally starting to wake up. And you're seeing this possibly caused by the rampant buying that China is doing in preparation for their new reserve world currency that's backed by gold. If you look at any time there's significant inflation, stocks do well, paintings do well, houses do well, but they don't really do well. They just increase in how many dollars it takes to buy that same asset, but you're no better off. That's where a lot of people sort of don't understand how serious this is, or how they're kind of getting screwed over a bit. They don't really recognize it, or they don't feel the actual diminishment of the purchasing power of their currency. But here's the thing that confuses me and scares me a bit. Gold is a good hedge against inflation, yeah, you know that. But gold is also a hedge against war, global insecurity. It's got a price premium, a war premium put onto it. The price goes up when economies and countries are in chaos or fighting with each other. Swiss exports of gold to China in July rose to their highest level since November 2016. According to Swiss customs data, Switzerland shipped 80.1 tons of gold worth $4.4 billion to mainland China during the month. The 21st century world economy has been one of fiat currencies, paper money backed by nothing other than a country's exports and their laws. If the BRICS countries are amassing gold as a way to return part of the world to a gold-backed currency, as was the case in the post-World War II status quo until 1971, it would force the West into taking a position of fiscal and financial austerity that it hasn't been forced to endure for a long time. Gold goes up in inflationary periods, it goes up in deflationary periods, but just in each situation it's for different reasons. South Africa and Brazil also added small amounts to their national reserves over the last decade. And interestingly, Saudi Arabia doubled the kingdom's gold reserves over the last 10 years. India, not to be forgotten, doubled their gold reserves. But the main reason that I personally like gold mining stocks very much right now is because their profit margins are very tiny at the price of gold. So if they're making $10 an ounce that they extract and sell, and the price of gold goes up $20 more, then they're making $30 an ounce. They're tripling their profit margin for a small $20 per ounce move in the price of gold. That's why I think that gold mining stocks, high quality ones that don't have a tremendous amount of debt, those companies with big proven reserves in the ground, these are the ones we talk about in the newsletter. I believe that's one of the biggest opportunities right now. There hasn't been a gold standard anywhere on Earth for 50 years, and it's a stretch to imagine that there will be one. Yet it's believed that paper gold outnumbers physical allocated gold on balance sheets by 400%. By buying as much physical gold as possible, the BRICS nations may be actively removing paper gold from being turned into physical gold by Western banks. Once it gets going, and this is what's happening, it's just starting to wake up a bit, and as it gets going from this point, it will go up a lot higher for a long time and start doing some of the things that I've been expecting for a couple of years now. But while oil is breaking down, do you think that maybe gold is starting to break out? And it's just slow because it's waking up, and once it gets going, it'll go, and that's going to be very rewarding for anybody who's invested in gold mining stocks or anything related to the price of gold or silver. And since I released that video to you, the price of gold has gone up about $150 per ounce. That was a month ago. But what's performing even better than that, as I explained in this video, is that the gold mining companies will perform even better on a percentage basis than the increase in the price of gold itself. If you're ever wondering if I put my money where my mouth is, I told my daughter to buy some gold mining companies, told my father, I told my friends, I do it myself as well. I'm either wrong or early plenty of the time, but I'm always only telling you what I truly believe will come to pass. And gold prices have broken $2,000 an ounce. Right now they're at $2,027. But I'll reiterate that this is the beginning of a move, not the end of a move. There will be dropbacks. The price of gold might drop back below $2,000 an ounce again. but it will continually produce higher lows and higher highs as gold demand continues to rise worldwide. And even just the understanding of what gold is and how it operates and how it's going to help people protect their assets during a time of economic chaos, that's all going to be a wind in the sails for gold. I always tell you this channel is about your economic survival. One of the ways you might want to try to economically survive is by owning some physical gold and silver. And definitely look at getting some exposure into high quality gold mining companies. I believe that they're going to perform incredibly well going forward, and they're one of the best opportunities of any kind of investment that I see right now, in my opinion.
Please subscribe to the Peter Leeds YouTube channel so you will thrive throughout the economic breakdown.